Good evening friends, welcome to another video of Market Profile Engineer. So as always I tell, this is just a educational video doing my journaling of my trade, recording my mindset and emotions which came out throughout the trading day. So as per the long-term activity record, yesterday was a neutral day. Actually, there was a mistake by telling it was a neutral. It was a non-trend day. So normally what happens in a non-trend day is that it normally happens before any economic data release or any big news. So yesterday was a day where the tariff rate for India by US has been declared. So it was around 25%. So that before that news was declared, market was in a condition where the market participant balance their position in expectation of market's reaction to an external stimuli. So there won't be any activity. Trade is not being facilitated in any of the direction. So there was little market participation or no confidence. That was the kind of day yesterday. It was very narrow range, and if we see the volume also, it was very low. And whenever this kind of situation comes, we should expect for a big trending day in the upcoming day. So as today is the weekly expiry as well as a monthly expiry, it was quite sure that it will be a trending day. And our view was that for consecutive three months the value area is being shifted to a upper side. So we were expecting a bullish trend, and close can be around the POC area. So today was, our perspective was as a bullish day. So market opened below the yesterday's value area. It was a big gap down as the news was not favorable for Indian market. So Nifty opened much beyond below the value area, previous day value area low. So as our expectation was that it will be a bullish day, we should look for a bullish trade. But before that we need a confirmation. So it opened below the value area low. It rejected 29th July low exactly at the same location, and it reversed. So it was a clear indication that it is going to be a trending up day. So this is the setup. Previous slide I already explained. It was a open rejection reversal, and clearly one time frame formation occurred in the D period as it took the IB high. So that was a point where we should have looked for a trade. So in compared to other days, I've changed the sequence of the slide. This slide, shows what we should have done. Actually, there was a trade as indicated in the initial stage where that RSI was below 50, and one of the candle took the Bollinger Band mid level, and a high green candle was formed. There was a clear trade. But in this case, actually, if we see this trade, I did not personally take. I took the trade which have been indicated in the second one at a higher level. I'll tell why I took that and what was behind that in the coming slide. So what trade we should have done is was given in the first condition. So in this case, if we see, our stop loss could have been very huge. That is around 60 point something is there. In such cases, what we need to do is that we should look for ATR, that is average true range. In case included that indicator also towards the downside. You can see that around 30 was the ATR at that time. So when ATR is 30, our stop loss should be 30. So in this case, it should be since our entry is at 325, our stop loss should be at 295. That means 30 point stop loss. So we can aim for a 30 points when we consider 1 is to 2 risk reward, 60 points we can aim for. That was a good, today was a good move which we could have done. But as I was busy with some of my work, I was not able to catch the exact location. But seeing that green candle and the size, I had a fear because as it opened in a gap down condition, and it was an expiry day, and I was not in a position to look at my mobile and do a trade. I did not enter in that trade, but in the consequent candles, if we see, it was showing a very good trending one time frame formation. So I was really upset within myself that I did not enter for a trade. I should have entered for that trade. So due to that missing the trend, I was eager to take a trade. So for sake of doing a trade, I took a trade in the when the market was in a almost a high condition, that too at around 2 o'clock. That is, it was a closing time. I should not have entered that trade, but for sake of doing, I took an entry. But what I did was I kept a very minimal stop loss, and I traded in a huge quantity. This was against my trading rule, but still that mindset shows that I am not still able to do with a high quantity, because this can create a, if the trend was against us, it could have given a huge loss. But as one thing I did in a matured way was the stop loss which I kept was very low. That was around only 5 points, and since I was not sure of that trend because it was almost closing time, I just kept a 10 point target. So today I got a good profit, but that was not a disciplined way. I should not have done that. So that is the case of trading today. This is what I've written in the mindset. Anyway, my conviction was correct, and my trend was correct. That is why today I ended in a profit. Otherwise, it could have been a big loss. So that's it.